Welcome back to U.S. Farm Report this weekend. Alan Brugler and John Payne joining us. Alan, talking a lot about this spring planting pace, and impressive in some areas, not so impressive in others. Looks like we are going to get warmer weather here. Is the market focused at all on the U.S. planting pace?
I think the market's fairly comfortable with the planting pace right now. We've seen very rapid progress across Missouri, Southern Illinois, Indiana. You're starting to get some improved weather for areas a little further north. And still, yeah, we're a little concerned about the northern plains in Minnesota, but I think we've kind of gotten used to the idea that USDA will have to cut the planted acreage, that we're going to see a little bit of prevent plant there. Unfortunately, that seems to already be built into the price, and because we're comfortable with both the Brazilian crop right now and the U.S. planting progress, the price has been under a little bit of pressure here.
John, an area actually seen rain that needed it. You look at Lubbock, Texas, that area of West Texas, the Texas Panhandle. Do you think that actually aids a shift in planting, and we could see more cotton acres this year?
Well, I don't think so. I think the intentions are probably set. If guys are going to chase off Milo here, Milo would be a good one to plant anyway, just given its non-GMO exposure. So I don't think you're going to see a major change. Maybe like Alan said, a little bit lower on prevent plant and corn. But all in all here, I think that the market is pretty comfortable in the new crop right now. You look at the way that the new crop 24 is traded. The new crop 25 has also been soft as well. So the back end of the curve is pretty easy to be pushed around by paper. I think the front of the curve, though, obviously is the one I think where the fireworks could certainly show up, especially given the strong basis in corn.
Switching to soybeans, when you look at demand, Alan, there are some concerns about new crop demand for soybeans. How bad is it at this point?
Well, the forward sales on soybeans are very poor. Of course, we just had export sales reported this week again. The forward bookings for next year, the third lowest on our books. The only 2 years that were lower were 19 and 20. Of course, the one was the trade war with China, and the other one was COVID. So, yeah, that's a pretty low endorsement for bullishness in beans. I think part of that's just the whole short crop, long tail thing. We were at 10-year highs last year. The market's expecting prices to revert back towards the mean, that over time things will get cheaper. Very comfortable with that record crop that Brazil had this past season. And so, yeah, we're kind of grinding lower here and not wanting to commit too much. So that's not encouraging. You have the bull story on the renewable diesel side, but those plants still have to be built in many cases. I can be more bullish on bean oil than I can on beans right now.
John, you guys have some offices down in Brazil. I mean, is all of that new crop demand, is it truly moving to South America?
Well, I think the biggest issue that Brazil has is that the pace of growth as far as acreage expansion hasn't been met by infrastructure. So, you've essentially doubled production over the last 10 years, we'll call it. And the amount of roads and the amount of transportation access and the amount of, just offloading vehicles that are available aren't double. So you have supply now off a really good crop year. And Alan mentioned the year prior, another good crop year. You have, a market that I think certainly has just nowhere to go on these sales. So I could be real bearish on that aspect. Obviously, supply exists. But if you want to be bullish, you can spin it to say, hey, the beans that are stuck in Mato Grosso right now, those aren't competitive with the U.S. port anyway. They're not getting out. So if you need beans in the short run, I mean, you're going to turn to Brazil. But if you need excess amount of what's planned, you're going to need to go to the U.S. because the line's going to be really long just to get it out of ports like Paranagua. Not to mention that, Argentina is going to be buying from Brazil as well.
Alan, when you look at wheat, I mean, we're going to get, a better picture of the wheat crop as we see some of these wheat tours take place. But, really, what had a stronghold on wheat prices this week?
Well, of course, wheat takes no prisoners, and we were grinding lower. The funds had a huge short position in Chicago, and we're keeping their thumb on it pretty heavy into the beginning of the week. Well, what kind of turned us around was we had a very large export sale to Egypt, 655,000 tons. It wasn't U.S. wheat, but it was demand. And then, of course, the crop condition ratings have been expected to improve this week after those rains in the southern plains. They really didn't budge. So the ratings are still poor. HRW's supply was already down from last year's crop problems and is not going to rebound as much. The real problem in wheat is SRW. It's trying to be competitive with French wheat and with Russian wheat. Russia's basically giving away wheat. They claim to have a much larger stockpile than what USDA thinks they do, but they're aggressively trying to move it and raise revenue to fund their war effort.
Well, from the decision by the Fed this week to another bank failure, what are we watching with that when it comes to the markets? We'll talk to John Payne and Alan Brugler coming up.